Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. If you're new, welcome. Make sure you like and subscribe. And as always, let's jump right into it. So today's gonna be kind of more of a little unique video. If any of you guys watch Shadow Trader, aka Peter Resnicek, you'll see this is kind of very similar to what he has, but I kind of have done a couple minor adjustments to it, added a couple things, taken a few things away that I really don't care about. This is more just for the kind of day trader of kind of seeing what the market's doing and all that. Kind of threw my own little spin on it. And as always, I'll leave the link below to this entire grid, so you actually can have all of these kind of this set up, this entire grid with all the things on there. So I'll go through what each one is in a good way to kind of understand and look at this. So over here, this is the E-mini S&P, okay, everything ES, 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 advanced decline lines in the tick, okay, but mainly right here what we have are the E-mini S&P futures, a 5-day 5-minute chart. Okay, so this is kind of this is one of my major charts that I love to use. And as you guys know, this is where I have all my gaps, open gaps and open VPOCs. One of the things, I'm filming this right after we just rolled the new future contracts. So whenever we roll from like June to September, we're now on the September contract, I erase all my trade zones, all my open gaps, VPOCs. I don't try and match them up. I kind of start with a clean slate, and the only thing I start off with are the previous 5 days, right? So we have a gap up here that hasn't been filled, naked VPOC, a gap down here, and a naked VPOC right here, right? So I have this chart here. My next chart, and this kind of tells me, hey, we got VPOC. Okay, it's also a high volume node from the other day. Okay, cool. If other things are lining up, I really like this chart to maybe look for a short on the very first touch, right? Second is down here, we have just a normal 15-minute chart. Okay, nothing else on there, just kind of what's price doing. If you want to add an RSI to something like this, you can just come over here. I actually like the RVIs. Okay, let's do this one, and RVI, just for me, I like it better for divergences. And look at this, nice divergence, right? So if you're watching this, you could go, okay, hey, we're oversold, kind of pop. Hey, here's a divergence. Maybe I want to get long, looking for a bigger move, okay? Just a very basic, no thrills, just kind of like, okay, we know, hey, price might stop here, might stop here, might stop here. Different levels, very easy, simple chart. Over here, we have a 5-minute chart with a linear regression channel. Okay, so it automatically plots them for you. So if we come down, you know where there's potential support resistance. If you use linear regression channels, it's already on here. So it just kind of helps you a little more with what's going on as price is moving in real time. And then over here, we have my famous DMA, double moving average. This is again a 512 tick chart, and here I have my first hour high and low from the overnight session with my Fibonacci extensions above, below. I have my value area high and lows, 50% from high to low here. This is the first hour, the yellow ones, so I kind of have some off to the right and so on. Over here, we have our AD lines, advanced decline lines, over the last 5 days. It's a 5-minute chart. If you want, you could change it to 1 minute, but you're only going to see a couple days. We could try and change this to 5, see how much. and maybe this might be a little better picture to kind of see minute by minute, right, versus 5 minutes. But it's up to you. Since everything else is a little longer time frame, you can either change that to 5-day 5-minute or 5-day 1 minute. It's up to you. And then over here we have the tick chart, overbought, oversold levels based on the tick. Usually if we close below here, watch for a reversal back, and usually when that happens is when we get bounces overbought, oversold levels. And one of the reasons I like the 512 tick chart with using the tick, with this tick, okay, overbought, oversold of the nicey underneath the hood kind of, is when we're here, I can maybe say, hey, look, as price came down here, 1048, let's see what this looked like around 1048, and look at this, we made this low here, right? So somewhere around here, we got way oversold, we bounced. Well, look at this 11 area, right? 11, we got oversold here, okay, closed below, but we have a higher tick divergence with here, or sorry, this is right here is the same as this oversold right here. So we're higher here, not lower, but yet price is actually lower, right? So if we kind of look at this, we have divergence and a nice run up. So maybe if there's a divergence over here to this price on a real small time frame, that could get you into a trade. Maybe watch the 5-minute. Hey, maybe we're at a regression channel, all these different things. So hopefully just a different way to look at the market. I know everybody's always looking to add things, remove things from their charts and all that, but I've used this in the past. I thought it'd be fun to share this along with you, kind of have everything right here at your fingertips. So again, I'll leave a link to the grid down below, and if you guys want, just go down below and there'll be a link for your Thinkorswim. So, but as always, thank you for watching, and we'll talk to you soon.